Well, the Treasury has been really nimble at managing expectations on the street and how much debt they're going to be asking for, how much borrowing they're going to need. And so back in late last year, in November, we had a 30-year auction that was absolutely dismal. It was eye-opening. It was ugly. And so the Treasury managed through that, changed expectations, managed expectations that we're going to manage the amount of debt that we have to issue here. It shored up the market. Auctions continued on kind of unabated. We had some soft auctions, some tailing auctions, which means that they trade beforehand in a when issued market. It's like pre auction. And if those prices are higher, meaning the interest rate is lower, then when the actual auction happens, it's not a good thing because expectations were better than reality. We've seen a bunch of tailing auctions. We had a 20-year auction about a month ago that was just awful. It was abysmal. It looked very much like the 30-year auction. I want to make it clear, it wasn't in any danger of failing, but it was a red flag to the Treasury on just how much demand there is for that duration, that was not encouraging. So then we just had a 30-year Treasury auction today. It wasn't that big, but again, it was fine. It went off without a hitch. It actually looked fine. It actually stopped through, meaning that the bids on the actual auction were better than the pre-auction, the prices paid. So we're going to see here, Brandon, as we continue to spend money, as we continue to run these deficits, we're going to have to continue to borrow more and more. It's unclear exactly where the tax receipts are going to come in the next month. We'll see where that comes in and just how much the Treasury has to issue over the second quarter. But I'm going to be watching these auctions carefully because if you get into the period here where you've drawn down the reverse repo market, so you can't just keep issuing T-bills anymore. You've got to move further out on the yield curve on the duration and start issuing more 10-year, more 20-year, more 30-year treasuries. Well, that could present a problem. It could crimp on liquidity, especially as banks as their reserves wind down. They're over $3 trillion now. If they're down under $2.5 trillion, the Fed starts getting nervous. The Treasury starts getting nervous on these auctions. So we're gonna be watching that for sure.
Do you foresee, and part of this too, I guess, is social media. There's been a lot of talk about this lately as well. I mean, the government, the ruling class, they are very aware of, whoa, these things are spreading. The bank crisis spread because of you people on social media. And they don't like Bitcoin and they don't like social media because they don't like how fast word can spread or being outed or being called out or whatever it is. It feels like it's going to be something to that effect, like a black swan, I guess you could call it in a way. But like if there's some auctions that go no bid or there's successive things that are happening, and then all of a sudden you have Bitcoiners, you have people that are in the know or paying attention, and they're like shouting from the rooftops, like, hey guys, this is not good. And then you see this spark, just like we saw a year ago with the banks, or it was a New York Community Bank. Now, I mean, things like that happening where it's like, whoa, and just lights a fire.
Yeah. I mean, that's definitely possible. Like, for instance, you would never have had so many people keyed in on Treasury auctions as you do now. If I post something on Treasury auctions, I mean, there's a lot of people watching that. Tens of thousands of people, hundreds of thousands are seeing those posts, and that's not normal. It's a new normal. When I started on Wall Street, if you didn't have a Bloomberg terminal, you didn't know what happened in the Treasury auction. Now you can just pull up on X and you'll see what happened in just minutes. So pull up Zero Hedge or, some often mine, and you'll see what happened. So, so it is a different world we're living in for sure. But that can also create opportunities because it creates outsized, unreasonable movements and volatility. And so because of the herd mentality and just the sheer number of people coming into that trade or into that event at that very moment, it often produces some, I would say, it's an inefficiency. This is a big thing, I think, with the SEC is they didn't want investors to be able to redeem So there's two things. They didn't want the investors to be able to redeem their FBTC or IBIT or whatever the other, they didn't want to say, well, I want Bitcoin. So they're going to be cash settled, cash redeemable. That's it. Okay. So that was a big thing. How are they buying Bitcoin throughout the day is probably what your real question is. And this is confusing.
Yeah. How do we make sure that they are buying it? Or for the person that
they are. So what's happening is you have approved participants, and what they do is they're out there. These are professional traders, market makers. They're making the market in the different ETFs. And as people are buying, well, they're hedging that. They're going out and buying futures or options or whatever they need to do to hedge it. So then at the end of the trading day, they settle out, okay, this is how much we need to buy. I'm hedged 100% on that. So you're going to see the Bitcoin price move throughout the day according to the price of the activity in the market. It's not like people are buying in the day and then overnight it jumps because they had to buy overnight, and then they buy it during the day and then overnight it jumps again. That's not the way they're settling it, and they're settling this, or they're filling those trades throughout the day. They're hedging them throughout the day, and then they're going to match up and swap. Basically, they have one big block trade after hours or the next morning, where they settle it with the ETF, and the ETF is buying and they're selling, and then they're clean, and then that's it. So, but that's what's happening essentially. All of the above. I mean, they're using every single tool they have at their disposal, that they're hedging it, and fair disclosure, I have not traded in many years. I've been managing portfolios and had other people trading. So these trading tools have gotten highly sophisticated, and they, when I say just participate or be on the VWAP, I've got old school traders who can do it by instinct. But then you've got other people that just put it in this computer program and it does it automatically. So it's all of the above. Well, some of them are actually posting the addresses that have the Bitcoin in them. So we know that. The other ones are using approved auditors. You've got oversight from the SEC. It's in BlackRock's interest to own the Bitcoin. They're making fees off this. It's not like this is not going to be my opinion is that this is not going to be the rug. This is not going to be the rug pull of the century. They're in the business of making money. They're not in the business of scamming people. And in order to do that, they need to uphold their agreement. I'm with Joe Carlasare on this, that this is the way that it's structured and the way it works. It's just like Apple. How do you know that your custodian is actually owning Apple? I mean, look, this is not Bernie Madoff, where he just lied about it and told his investors he was doing all these things, and the auditors just kind of glanced right past it and just signed off on it and went out to dinner instead, which was it's an incredible story. But this is, this involves thousands and thousands of people in these firms, that you'll have dozens, if not hundreds of people who will be touching these things daily, in each firm. So this is a big deal. I don't see how it would have to be a systematic, collusion from the top down, including the SEC, including BlackRock, including Fidelity, I just don't see how that could happen.
What did Michael Saylor see that Warren Buffett doesn't see?
If you want the answer to that question right there, and you like that spicy clip, check it out here. Come on, we'll see you in there. But if you want the full interview in its entirety, all the spicy clips put together, and you're not going to want to miss it, believe me, then check that out here. Come on, we'll see you in there. Do it.